Hey traders, Raghee here. On Tuesday, we talked about crude oil from the perspective of this OPEC 2 million barrel per day rate, well, I shouldn't say rate cut, output cut. OPEC is the central bank for crude oil after all, but they were going to cut production output, meaning less supply, which conceivably would be bullish. And a lot of folks said, Raghee, you're selling into this? And I said, look, market structure dictates that the general trend in crude has been down. So I have two choices. Wait for the move higher or chop to occur on the heels of the announcement of whether it was 2 million, 2.5 million, 1.5 million, right? Whatever it ultimately ended up being. By the way, it was 2 million. So we rallied on expectations of 2 million, and we had a little bit more follow through in that the 2 million barrel was going to be enacted in November, so pretty darn soon. So we're going to see this output cut production. I think another thing that an output cut in production, right? So less crude oil reaching the market. We also know that due to CapEx restraints and all sorts of things, it would take a long time for U.S.-based oil producers to activate wells. If you look at, just do some general well search, Google it, right? You'll notice it does take time. It's not as if we walk on over to the garden hose at our house and turn the spigot. That's not how it works. It does take time, and there's a lag. And with that, we got another push, I believe, higher. Now, we got the 2 million, we got the move higher. Two things we want to ask ourselves. And first of all, the idea is never to preemptively just short into a major announcement. The idea is, which way could I trade this? And I'm still thinking short. And the reason for that is largely this is still very much an overall downtrend. There's nothing about this that says the culmination of the bounce we've seen, which is about on par with the bounce we saw in August, that this is now an uptrend. It's just now a fairly deep regression to the mean. The mean for me is the wave. By the way, gang, there's no one mean. There's no regression to the mean, and everyone agrees upon what the mean is. For some, it might be a 50% retracement. For others, it might be the golden mean, the 618 retracement. For some, it's the 21 exponential. I don't use the 21 exponential. That's usually entirely too aggressive unless we have a fairly established trend. Worked really well back in September, got smashed both in August and here in October. So be careful with that. It's usually an aggro level, but it's still a viable regression and mean zone, maybe the aggro zone. So Rag, what are you going to do now? I'm going to wait for a pattern. We've talked about this pattern before. I think a lot of you know what I'm going to talk about next. And that is the pattern where we get the, and we can see it here, the arrow, right? And it's a higher high surrounded by two lower highs, right? The lower high before, the lower high after, and then waiting for the support level of the higher high candle to be broken to the, you guessed it, downside. So this is a momentum style entry. Once we get the higher high that's no longer being broken with a subsequent higher high the next day, once we get that higher high, which today's little squat-bodied candle might be it, right? I don't know. If tomorrow, Friday, we get a lower high, and that lower high takes out the Thursday low, which is 87.04. Let's wait for the 87 handle to be broken, not just 87.04. Let's look for 86.95. Then we have a resumption of what could be the downtrend. That's exactly what we've been waiting for. Let the 2 million production story make its way into the market, complete the correction into the wave, this regression to the mean, and then let's see what we can do. It makes increasingly more sense to think also about where volume could be waiting. I'm going to show you something else here with my V-score. Look at the last time. Look at the last peak we had right there. Let's pull that high right across the chart. Do you see this is where we are right now? Very important that this high hold. And if it doesn't, what's going to happen? We're likely going to see a regression nearly to the mean. It looks like that would be the next stop. And that means a higher high and likely then a test of the resistance of the 200 exponential propulsion, of the white dots on this screen. What we want to remember overall is that as we move higher here, this becomes less about the trend and more about something that's overbought. And if that happens, if we take out today's high tomorrow, we can start talking about whether or not this is a trade that we could even consider anymore. We're still waiting on the pattern. Okay, while we wait for the pattern, this is the fun part. Day trade, right? We day trade. And when you day trade, the bias is whatever the morning is going to present. We were trading above the previous session close. There's a general bullishness there. Then we had the bullish breach. Again, general bullishness there. Once we breached, we're looking to get down into this area of the, what I call the retreat. And this is a Fibonacci retracement zone, right? It's a Fibo zone. So once we get the breach, which happened right there, this is as close as we got. We got 2 candles at the very aggro level of this. So 2 opportunities. And then there's your move to the upside. So there are day trading opportunities. Some of you might say, Rag, what about, if we can take advantage of hourly price movement ranges? Believe it or not, we really weren't trading that volatilely. We just didn't have the hourly price movement range in play. By the way, those of you that have been wondering, can I use volume and volatility? Absolutely. If you've got the V-score or you're interested in using it and you already have my HPMRs, think about using those volume-derived extremes, the lows and the highs, to correspond with the HPMRs. Slow stochastic is fantastic too. And if you're interested in more this type of volume breakdown, more of this, let me know. Leave it in the comments below. Maybe give me a couple symbols that you'd like me to do this on. My request is please make sure it's a symbol of, say, $20 or more. Even better, maybe one weighted within the broader averages. But, whatever you're interested in is fair game. Maybe we'll do that in Charts and Coffee or our next free video. On October 26th, I'll be spending my anniversary with you all, my 26th anniversary with you all, and we have a webinar on this very topic, volume. Whether that is we get a broader move to the downside in the averages, how do we identify when that opportunity to get back into the market, when is the coast clear, or even day trading. We're going to talk about those topics on October 26th. All right, gang, this is what I'm doing with Crude. This is the plan. We'll follow up on this. If you join me in Charts and Coffee, give me a nudge and I'll walk through whatever it is we have tomorrow when I see you in Charts and Coffee tomorrow. All right, gang, be good to each other. By the way, for those of you who don't know, Charts and Coffee is available right at the Simpler Trading YouTube channel every morning, Monday through Friday, from 9 to 9:20 a.m. All right, gang, so that's it for me here. That's the plan for Crude. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.